This is Acuma's On Point podcast. On today's episode, we dive into the data and techniques for servicing, recapture, and deepening member relationships. But before we get to our episode, just a quick word from our sponsor.
This episode is sponsored by Dark Matter Technologies. Dark Matter Technologies is helping lenders automate, streamline, and scale with confidence. According to Eric Burgoon, Chief Lending and Experience Officer at Lake Michigan Credit Union, Dark Matter is a true partner to us in every sense of the word. They listen to the needs of our team and members and continually work to help us automate and streamline the process. That's the power of technology built around real lending teams.
The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Ladies and gentlemen, boys and girls, hello and welcome to Acuma's On Point podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Today, I am joined by someone who was just named to HousingWire's Women of Influence, the legendary Marina Walsh, Vice President of Industry Analysis with Mortgage Bankers Association. Marina, my dear friend, welcome to the pod, and how are you doing today?
I am doing great, Peter. Thanks for that wonderful introduction.
Oh,
yeah, I feel very important. I keep telling my family that I'm a woman of influence. So,
No, I'm sure you're like me. If I was to tell my kids, I'm a person of influence within my industry, they would just roll their eyes.
Correct.
Yeah. So now, correct me if I'm wrong. This is not the first time. The last time you were considered a woman of influence in our industry was 7 years ago, correct? Right?
Yeah, about 7-8 years ago. So It's been a while.
It's been a while, but we'll call it it's almost like a two-time champ, two-time world champ or two-time woman of influence here on our pod. I think this is probably the most prestigious person we've ever had on our pod, so looking forward to it. Now, Marina, I'm looking forward to our conversation. Like I mentioned, we're going to talk about, the data and techniques about something I think is really important for credit unions, and that's, servicing and member recapture. But before we get to that episode, I always have to stop. I always have to pause and sidestep, bring Justin into the conversation. Justin, the Hawk, how are you doing? And please tell us, what's the latest and greatest happening over at Acuma?
I'm good, Peter. How are you?
Hey, man. I'm good. Just got back from vacation earlier this month, and, just living the dream, man. Just living the dream.
I know, you took my thunder. I was going to be like, we're back. No, I'm kidding. I mean, we are back. We've been on somewhat of a podcast hiatus, so it's a little weird. Sabbatical. Hiatus, sabbatical. Which one's less violent? But we're back. How was your vacation, by the way?
One, I needed a vacation for my vacation. But two, it was glorious. I mean, we spent 10 days in Maine. I ate, more lobster than I know what to do with. Drank some good beers. When we were in Bar Harbor or Mount Desert Island, Acadia, Bar Harbor, probably hiked about 30 miles around Acadia. So, in national parks. That was my heaven. So, all in all, I can't complain. Feel rejuvenated and ready to go.
There we go.
Peter, how old are your twins now?
They are, look at you, 6, and they're 6, and my son is 8.
And 8, 6 and 8. Wow.
Yeah, 6 and 8. So
That's
young,
fun.
but I tell you what, I hiked a lot throughout Acadia. They probably did about half of that with me.
That's impressive.
My son did a little bit more because there were a few more technical hikes that we went on, and the girls have very little legs, and so kind of stepping up on some of these cliffs was going to be a little more difficult for them. But yeah, it was awesome. So we go to, I know we're off track, geez. We tend to go to Bar Harbor every other year. And this was the first year that you kind of saw that light bulb effect for them. This is a magical place. Acadia is a magical place, and they understand why it's so special to me. So that was cool to see.
That's awesome.
Yeah, man.
Well, I'm glad to hear that you had a great vacation. It's time to get back to it.
But now we have to get back to work.
I know. So now that we're getting back to it, our next network meetings, they will all be at the Make Your Mark annual conference this year. So that's something that we're doing a little bit differently. So for the Q3 meetings, you have to come to annual to attend these meetings. There's just no other way to say it. But with that in mind, our annual registration is also open. So we're going to be in Vegas this year from September 20th to the 23rd. The agenda, which includes all those network meetings, is absolutely amazing. The speakers are lined up are absolutely amazing. Head over to our website to learn more and to get registered.
Yeah, we're just real quick. I don't want to jinx it, and I'm going to knock on wood.
Knock on that wood.
It's shaping up to be the largest event we've had. And I couldn't be more thrilled for this year's event. Like, we have really fine-tuned this event, the activities, the sessions, the networking events. I mean, again, I think this is probably going to be hands down the best one we put on yet.
I totally agree. We're finding new ways this year to bring a different level of an experience to our attendees. So it is certainly something that does not want to be missed.
Right on.
And aside from our On Point podcast, if you're looking for that extra education in the meantime before we get back to our in-person events, check out our Inside Track webinars. Those are happening a couple times a month. For more information on all these, plus so much more, head over to our Acumen website.
Okay. Appreciate it, man. Thank you very much.
Thank you.
All right, Marina, coming back to you. Now, again, we're going to have this great conversation on servicing and really member recapture or customer recapture, and kind of deepening that relationship. But before we do, I always have to ask the first question that I do on every pod. So quick backstory. We started this podcast because there was this opening, this gap in the credit union space where, we all listen to podcasts on a regular basis. But one of the things that we found was credit unions are doing something special, and it's very rare that people within the credit union industry are highlighted, regardless of the fact that they're doing these amazing things. And so we started off with this idea, okay, let's make the podcast a people piece. And here we are kind of transitioning to more of a technical, work-related conversation like we're going to have today. But fundamentally, we still stick to the roots. We still stick to the core identity of what this podcast is, and that's getting to know people who make a positive impact in our industry. And because of that, I always start with the first question. I always end with the same last question. In that first question, and I sent it to you before our recording today, the first question is always going to be, who is Marina? Really what makes Marina? So if you could, that's really the first question. Before we dive into, servicing and the data and recapture and all that stuff, first question out of the gate is always going to be, who is Marina? And you can make this as work-related as you want to, professional as you want to, or you make it as personal as you want to. But please share.
Well, I'll start with the work first, Peter. How about that? I view myself as a financial analyst and an industry expert, having been in the industry now with Mortgage Bankers Association for a quarter of a century. Long time, just had my 25th anniversary in October, and always in research and economics. So, being able to speak on all different facets of what's happening in the mortgage business, the business of mortgage banking, whether it's on the production side of the business or the servicing side. So that in a nutshell is me. And, we try to bring the most accurate and best and most detailed data to our members to help them be successful. If they're successful, we're successful. So that's me in terms of work. Outside of work, I'm a mom, I'm a wife, I am a member of a book club, and that's long-standing.
Is it one of those like book clubs that my wife belongs to where it's more like sitting around drinking? Or is it actually a real book club?
Yeah, we do the drinking, we do the eating, the dinners, but we also now talk about the books. And so sometimes we get into, the Reese Witherspoon book club or the Oprah book club, and the books start being too much alike. But now we're trying to expand out a little bit. So,
well, my wife's book club has not gotten to that point where they're talking about the books yet. So, I mean, I guess it takes time.
It's an evolution. Stick with it over 2 decades. That, again, I've been with that book club for a long time. But that's me. I, too, like the outdoors. I'm looking forward to the beach, but I'm more a lake person and a hiking person than beach. But I'll go to the beach if the opportunity presents itself. How about that?
Love that.
And then, Peter, most importantly, how did we meet? I'm a certified mortgage banker.
Yes, we are.
And
yes, you are.
Peter and I, way back in the day when your twins had not even been born, we were in the same study group for our certified mortgage banker. And trivia question, can you name the other people in our study group?
Absolutely. Darlene Lee and Sherry Gallins.
Yeah.
Oh, and God, she's at USAA. Sure, she was at USAA.
Way,
yes.
Yeah.
We were strategic and purposely went after a small study group. And I think it helped us a great deal.
Yeah. And all of us are now CMB. So that says a lot.
That's right. And the majority of us still keep in touch.
Yeah, that's surely the case. Yeah.
All right. Well, Marina, thank you very much for sharing that. And I think that's good to share that because, a couple things. You're a staple at MBA events, right? I mean, your Sunday afternoon, evening, whatever you want to frame it up as, presentation where you kind of dive into the data of our industry. It's one of those must-attend sessions. As of late, you've been almost like a regular at our events. I'm glad you had an opportunity to kind of share that story or your story with the group because, again, they've seen you, they respect you, they listen to you. It's good for them to get to know you a bit more, too. So I'm glad you went through that. Now, let's transition to the meat and potatoes of our conversation and, really servicing recapture and customer relationship deepening. Now, I guess first question out of the gate, and it's really just I think we have to define what this is. And the first question is really from your vantage point, and it can be you, Marina, or you at Marina at MBA. How do you define servicing recapture? Especially when we focus on, how it may have evolved with, credit unions, banks, IMBs adding home equity, which includes obviously HELOCs, non-QM loans and renovation loans. So how do you define that servicing recapture?
Yeah, that's a great first question, Peter, because when you look at public filings, when you see different quotes saying, we have a servicing recapture rate of, 70%, that there's got to be something different in the definitions when MBA is coming out with a servicing recapture rate of 17% based on, a study of about 60% of the servicing market. So very big differences. In fact, in a sort of a 2-page PowerPoint, I summarized about 15 to 18 different ways of looking at servicing recapture. But to your question, we use a very simple way of looking at it. We don't take out. When you start taking things out, it gets a little bit hard. So we include most everything. But if you think about it, we include the servicing portfolio retention volume, and that could be refinances or it could be purchases within 12 months of the payoff. So that's your numerator. Denominator is simply of your owned servicing. So you have to have owned MSRs. What paid off for whatever purpose. It could be payoffs for cash, could be payoffs for a refi, it could be payoffs to get another purchase loan. It doesn't matter. And so we look at this in both loan count and dollars. Now, to your point on HELOCs, it's been really tricky. And so we have recently revised our definition to say that HELOCs, and you may not like this, credit unions, but HELOC, there has to be a full payoff in order to include HELOCs as part of your, quote, servicing portfolio retention origination volume. So there needs to be a full payoff. So if there's not a payoff of that first mortgage, it would not be included. That said, recapture is just one statistic. You can look at replenishment. replenishment would have it, just the number of loans coming in versus those that are exiting. That's a really helpful data point as well. So, Recapture has its limitations. For our purposes, we have it very simple way of looking at things, but there are plenty of servicers out there that have sort of different iterations of Recapture. For example, if that loan originally came through a TPO channel versus retail or versus consumer direct. And so they can track sort of the whole history of that borrower. But everybody's at sort of a different level of where they are in terms of tracking that.
Yeah, so please forgive me for kind of jumping around. And, this was going to be one of my later questions, but I think it's a good question now. And you kind of hinted at a second metric. But, for our listeners, whether they are heads of mortgage or executive, what's outside of recapture and replenishment, or maybe those are just good enough. What's one or two general organizational metrics you recommend they kind of put in their dashboard to keep recapture, retention, or even relationship deepening kind of front and center?
Yeah. I mean, as credit unions and depositories in general have a lot of information on their bank customers, and sometimes the mortgage and the retail sides of the businesses don't always communicate well. So starting out simple with some basic metrics on what is our relationship deepening? What does that look like? How many bank products or credit union products, I should say, right? How many products do we have per servicing customer, or just overall, how many products? That in and of itself is hard to track for some depositories. Knowing the percentage of your servicing customers with other products, any other product, checking account, credit card, HELOC. I think that those basic statistics are really important to track. And I would throw in something else, Peter, which is customer satisfaction. You make one bad move, either in terms of the production side, when the borrower's closing with you and something goes wrong, or on the servicing side. For instance, the borrower is shocked because they weren't educated on escrow payment increases. One kind of mistake or turnover, so to speak, could really set you back. So understanding your net promoter scores, understanding customer satisfaction, finding out ways to fix those issues, because borrowers can be fickle. One thing that they feel as if they've been wronged in some way. And guess what? There goes your recapture. They're going elsewhere, and there's plenty of elsewhere to go to.
Yeah, and I'm glad you brought that up, for a couple reasons, right? Or all of this up. This is going to sound horrible. And I don't mean to sound so negative, but back when I was the head of a mortgage division, I would always tell my staff, customer service is a fine art, right? You're only really as good as your last mistake. And that's really kind of just echoing exactly what you said. They're fickle. You don't return one phone call, and your net promoter score could go down, right?
Mm-hmm.
You miss a closing date by one day, even though it's not detrimental to anybody. Again, you're losing a possible referral relationship. That member, that customer might think of you as negatively. So I love that you brought that up. But I love that you kind of focus on, kind of metrics for the deepening of the relationship, because we're actually getting ready to release a white paper, I think like a week or so, something like that, that really focuses on mortgage as a growth engine. And it's really intended to say, hey, by getting a mortgage, it leads to auto loans, it leads to home equity, it leads to credit cards, right? If someone buys a house, they're going to want to go get a credit card to help buy the furniture in the house, right? Well, now they have a new garage, and so now they finally can get that Corvette they've always wanted, or that boat, right? So, I mean, I love that you kind of bring that up as such an important metric, because especially when we focus on credit unions, I don't think we do this well enough to say, hey, this is why mortgage needs to be a priority because it leads to these other things.
Yeah, and I would say, Peter, there's a business imperative to make that argument. Mortgage needs to make that argument because, let's face it, for the last 3 years, these are tough times for mortgage. We're not back in 2021 where, refinances were just popping up. There's no low-hanging fruit anymore. And to sort of demonstrate the value of mortgage to the credit union as a whole is just becoming more and more important. It's not enough to just say, well, we're bringing in some incremental income, net production income to the credit union. We need, especially at this point in time, when margins are still relatively thin, that argument needs to be made. And some depositories and credit unions are doing it better than others. Yeah.
Okay, so, let's kind of keep going forward. And I want to talk about, technology, right? Because our last white paper, we actually focused on the need to invest in technology. So based off your research and the data that you have, when you think about all of the strides or the enhancements made related to technology, I'm assuming that they have caused a higher servicing cost to just maintain those loans or even just originate those loans. So to that point, what are you seeing among, we'll say, the top originating institutions, IMBs, banks, credit unions, doesn't really matter, in terms of using the same tools to offset the cost for recapture?
Sure. I mean, I will say there are so many amazing demos. I'm sure you're going to have them at your conference in the fall, and we at MBA have them. There's so much out there that it's overwhelming right now in terms of what can be done. And artificial intelligence, I know people have heard it ad nauseum, but it's the number one request we get from our members is just getting a handle on what's out there. And the demos I'm seeing, what I'm hearing about what can be done, eliminating all this stare and compare, making communications more effective with borrowers through prompts. There's a lot there. And on the servicing side and on the production side, there's a lot of data. And I don't even know necessarily whether this is AI specifically or just overall technology advancements. But you do have amazing predictive analytics to really understand what borrowers are doing and why they're doing it, and to basically get the clues as to what's happening with the borrower to even be able to better target individuals who may be in the money for a recapture and or thinking about buying a home. You think about the large independents right now and how they are trying to buy up various pieces of the whole home buying process, not just the mortgage piece. It's to get a better understanding of who that borrower is and what their needs are. So there's certainly a lot of data out there, a lot of analytics. You see some independents that are very successful, even those that have big correspondent shops. They build up their servicing, but then they are getting that recapture of that servicing book, even though those loans came in through the correspondent channel. And it's really because they have the analytics, they have the technology in place, predictive analytics to know a lot about their customers.
So it kind of prompts a question, right? I mean, you obviously have a lot of data. You read the reports from a lot of roundtables. So based off of that, outside of your standard rate and term refi triggers, what would you say are two leading indicators that a credit union who services their loans should be tracking to predict the recapture that you're talking about?
Yeah. I mean, there's so many. I can't name two, but I'll name some of them. change in income, if they have their savings account, is there a substantial change in terms of their deposit levels? That would be one indication. Just keeping track of the home equity levels, that may be a signal. Obviously, credit scores come into place and life events, clicks, keeping track of what borrowers are doing on your website, being able to know, gosh, they clicked on this 2 times this month. Why? Why did they do that? What are they interested in? Loan balances obviously come into play. I guess that would be more, Peter, your standard rate term refi, right? The higher the loan balances that we're seeing, higher refis among the higher loan balances. But just the aging of the loan, the amount of the loan balance, the amount of home equity, but also taking the clues from what borrowers are actually providing to you already. Those are a few. I couldn't name just 2. I'm sorry.
No, but I like that you said that because, it's most certainly a conversation I feel like we've had, and Justin, you can correct me if I'm wrong, but I feel like we've had this conversation in several of our events and maybe even on this podcast, how, credit unions just have a wealth of information on their members. And if you're not tracking that information, just a variation in income or a change in address or who knows, or a change in deposit, right? If you're not tracking that and it doesn't prompt you to take action, you're kind of sort of missing the boat, right? And I'm so glad you brought that up because I feel like we do our best to kind of talk about it, right? But it's like my kids, right? I'm not really in our members to my kids, but I coach my kids in sports, right? They don't listen to me because I'm dad, right? But if someone else, if another coach tells them the same exact thing, well, they must be right. So I'm going to do it that way, even though I just told them the same thing. Anyways, I'm not bitter or I'm not, bringing up some hard feelings. But anyways, I'll come back.
Okay. And I also think, Peter, for depositories in general, they all have to be on the same team. For instance, if you're seeing a customer with credit card debt and they have a ton of home equity in place and there's an opportunity for debt consolidation, be that trusted advisor, be that trusted advisor and present another opportunity for them.
No, that's good. Just for the sake of time, I'm going to move on to just some closing questions. Let's kind of role play. First one is you are advising a credit union, and when you go in there, they kind of sort of feel like that average, credit union, average servicer. Nothing really wows you. If you were to advise them on 3 priority moves to make over the next 12 to 18 months to materially improve, recapture and deepen those relationships, what would it be?
Okay, here I go. Number 1, you got to track when you talk about improvements over what. So you need to pick some metrics to track on a regular basis, whatever they may be. It may be replenishment. It might be recapture. It might be looking at deposits per loan officer. Who knows? But you got to pick a few metrics and have that as your starting point and then consistently track it. So that's number 1. Number 2, I already brought up. You've got to have a sense of what your borrowers are upset about, what they like, what they don't like through customer satisfaction surveys on both the production side and the servicing side. And then number 3 is you got to have a game plan that involves all different units of the credit union because, just like any organization, you can become siloed. Credit cards is over here. Home equity may or may not be part of the mortgage. Then you have mortgage. You have all these different disparate business units, but they've got to all somehow come together through really good communications and, quite frankly, leadership, and come together to have a common mission to make it be known that this is important, that this is good for the credit union as a whole.
No, that's great. Thank you for that. All right. So next question, second to last question.
Ooh.
If you were to kind of look ahead to 27, 28, again, we're role playing, you have a crystal ball. How do you expect the mix of originations, whether it's purchase versus refi, and the interest rate environment to kind of take shape?
Yeah. I'm going to have to refer. It's not going to be my crystal ball. It's going to be the crystal ball of all of MBA research and economics. And
That's fair.
we redo our forecasts on a monthly basis. So if you don't like it this month, maybe you'll like it next. But officially, we're pretty flat in terms of rates at 6.5%. Now, that saying, you could have a day like today where it was announced that the ceasefire is off, and that will cause changes in rates. So you're going to have ups and downs. And then that means that you really have to act quickly, right? Because you may have some news that comes out that will result in 25 basis points drop in rates. And you got to be able to take advantage of that. But over the next 3 years, we're pretty flat on a quarterly basis. But just know there's a lot of volatility. And so those could go up and down. Now, in terms of volume, it's going to stay right a little bit above 2 trillion is where we're looking through 2028. And about 1/3 will be refis and 2/3 purchase. So Peter and Justin, it's staying pretty much a purchase market is what we're seeing. There would have to be something extremely dramatic. The economy is being powered right now by AI, so we aren't anticipating a recession. I think our estimates for the probability of a recession are about 30%. So given that, that's sort of where we are. We're not going to see rates just drop precipitously. We have the problem with inflation right now that's not going anywhere. Even with a new Fed chair coming in, he's indicated he seems pretty hawkish. So that's where we are. It's going to be a purchase market. But again, our forecast only includes first. So there are opportunities in the HELOC space, in the seconds space, that would not be incorporated into our forecast.
Okay. Last question. And it kind of goes back to the last question I ask everybody. And we're kind of pivoting away from the actual content itself. But the last question really goes back to that people piece and really what keeps you going, what keeps driving you day in, day out to really serve our industry, you name it. So what keeps you going?
I love this question because obviously I mentioned I've been in this industry a long time and I've been with the MBA the whole time. And so my answer has changed as I've matured, like fine wine, right? But I would say what really keeps me going is our members. I love helping our members. I love interacting with them. I'm in a fortunate position where I do travel a lot and get to meet with members. And so it's never boring. Mortgage is never boring. There's so much change. I always learn something new, no matter what conference I go to or what speaking engagement, I learn something new from our members. So that kind of keeps it really fresh and interesting. I'm able to sort of think back historically at similar situations and do that compare when I need to. But yeah.
Okay.
Keeps things exciting.
Love that. Thank you very much. And if you can't tell, by the tone of her voice, Marina is very passionate about what she does in our industry, and it kind of bleeds through and how you present things. So again, thank you very much. Now, Marina, now it's time for us to transition to the second segment of our podcast. And this is where we sometimes play Jeopardy. Sometimes we do fun facts. But today we're doing the most requested segment, the fan favorite segment of dad jokes. So, Marina, prior to the recording, I asked you to come prepared with 2 dad jokes. So here's what we're going to do. You're going to share your 2 dad jokes. Justin's going to share his 2 dad jokes. And I will wrap up with my 2 dad jokes, and then we'll just close out. Does that sound good?
That sounds very good. And Jeopardy scares me, so I'm glad we're not. much prefer dad jokes. I can handle this.
It's okay. You would have been playing me. I have a losing streak.
But no, I think you've won the last one, Justin.
I mean, one, I don't know if we can call a one winning streak a winning streak.
Well, if we don't play it ever again, you
then
are
I end as a winner.
Yeah, you're defending champion.
I like this idea. We're never playing Jeopardy again.
Okay. All right, Marina, hit us.
Okay, I'll do a knock knock joke. Knock knock.
Who's there?
Who's there?
Refi.
Refi who?
Refine me when rates go down. Refined me.
Well, Marina, I love it. I love it. All right, hit us with one more.
You're trying. Okay, what's the next one? I love the World Cup. I'm following the World Cup, so I'll do a World Cup joke. So why do mortgage lenders love the World Cup?
Why?
Why?
Because everyone's trying to qualify. Yay!
That's good. All right,
good.
I love it, Marina. Thank you very much. All right, Justin, hit us.
All right. What looks like half an ice cream cake?
What? If it's one of those like my ice cream cake, I'm gonna be so. What?
The other half.
It was.
It was. I'm sorry. I knew. When I saw that, I was like,
actually going to say anyway. Yeah.
I knew Peter would be very excited to hear me say that one. And then, why did the scientists wear so much sunscreen?
Because he was bright.
No, because they were a paleontologist.
Paleontologist. Oh god, that was good. That was good.
Thank you.
That was good. All right, I'll wrap up. What do you call a dog who can do magic?
Oh, I don't know.
A labracadabrador.
Oh, that's cute. Oh, right. I like that one.
And by the way, my lab is literally snoring. If you hear snoring on this recording, Justin, I apologize. She's right here, and she's just snoring away.
I don't know. I think mine won because they were mortgage specific.
Oh, Marina, we've been doing so many of these. What, over 3 years, right, Justin?
Yeah.
We're at that point where we are reaching deep into the internet to find new jokes for us to tell. But I love it.
Claude.
I do.
Yeah.
There's always Claude.
There is always Claude. There is always Claude. Well, Marina, thank you very much for taking time out of your very busy schedule to sit down with us. Really enjoyed it. Thank you for always being such a great supporter of Acura and me. Our events are better when you're there. So again, thank you very much for taking time today.
Oh, thanks, Peter. Thanks, Justin. This was fun.
Good, good. And Justin, thank you very much.
Of course, it was my pleasure.
And to close out, thank you again to Dark Matter for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you for tuning in to the latest episode of Acuma's On Point podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the Acuma On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.
This podcast was edited by Resonate Recordings.